I have with me Ron Cross from ParkTrent. He's going to talk to us about capital gains and land tax. Welcome to Dollars with Sense, Ron.
Welcome to you, Dallas, and it's a pleasure to be on your show.
Now, how does capital gains tax work?
Well, capital gains tax is a federal tax. It's a tax that's applicable to any property transaction or share transaction that you make in Australia, and it's based on the profit. Fortunately for people in Australia, it's a very generous tax. If you've held the property for more than 1 year, the tax then is calculated that, say, if you make 100,000 profit on one particular transaction, that transaction then you can actually 50% of the profit is actually tax-free, and the other 50%, which is $50,000 in this case, is actually then divided amongst the ownership of the property, and it could be a husband and wife in particular, and that goes on to their taxable income, and it will create a tax creep for them personally, but it's quite a generous tax, as you only pay tax on 50% of the profit, and that's after cost of selling the property too, so that can even lower the profit, the level of taxes there that you pay.
So what happens if it's 75% in my name and 25% in my partner's name?
Well, the same thing. The 75% that you own, you have 75% of the profit, and the partner has 25% of the profit.
So if I'm on $100,000 a year and the total capital gains is 100,000, we divide it in two.
Yes.
Makes it 50,000.
Yes.
If I go 50-50 with my partner, that's 25 to me.
Yes.
So that 25 goes on my 100.
Onto your gross salary, which brings your gross up to 125, which is taxable at the 125 rate.
Yes.
Which creates a creep for you in your personal taxation, and your wife gets the other 25, and the same thing happens there, or your partner.
Okay, it's as simple as that.
It's a very generous tax, and I think if you make a profit, we pay some tax.
Well, that we do.
Yes,
that we do.
do.
Now, land tax. How does that work?
Well, land tax I particularly don't like, because I do have a lot of properties, and I do actually have properties in all states, but for the
states and territory?
States and territory, sorry.
Yeah, that's okay.
But with most people that have 2 or 3 properties, what they should be looking at, as I say, land tax is a state tax, and what that means is each state has its own threshold, and those thresholds are quite generous, and in Victoria in particular you pay no land tax up to $0 to $250,000 of land component. In New South Wales, it's $387,000 of land component. You pay no taxes on those particular states and property values to that, the land component only. In Queensland, it's just under $600,000. In fact, it's $599,990.
Right.
You pay no land tax at all. But when you get over those thresholds, it can compound and cost you dearly. And a lot of people have made a lot of mistakes in the past by buying 10 or 12 properties in the Victorian market or similar in New South Wales or Queensland, and they find then that their land tax bill each year is quite excessive, quite expensive at all. It really is a creeping up tax that catches you unaware.
So how do you get around it?
Well, how you get around it is you buy in every state and territory in Australia. You buy two, possibly 3 in each state, and that will keep you just under the thresholds, and that will keep you out of the land tax creeping. And the land tax thresholds, which will save you the land tax component.
So if I go and buy a $250,000 2-bedroom unit in a rural area,
yes,
there will be, in Melbourne, what happens, Victoria, what happens with that?
Well, if you buy a $250,000 apartment in a rural area, I would say that the land component there would be about $60,000.
Sure.
So you're way under the threshold. You could buy 4 of those and still be under the threshold. But understand that position will change as time goes by, because the land component will increase in value, and you're assessed on the new assessment each time they come out from the government.
Now, in Melbourne, we call something stamp duty. The difference between stamp duty and land tax?
Well, stamp duty is a transaction duty. It's a duty on the transaction. Land tax is an investment tax. It's on your holdings. It's really a tax that's taxing the rich and the wealthy. And I know a lot of people that are paying land tax, and they don't consider themselves to be wealthy.
Okay, so we still have to pay our stamp duties?
Yes, definitely. Yes, but in Victoria in particular, there's some concessions for off-the-plan purchases, which is quite generous by the state government. It's the most generous situation in the whole of Australia, in Victoria. If you buy off the plan here, you have a really great concession on stamp duty. It probably represents about 7% of the total stamp duty component is all you pay here in Victoria.
Well, talking about stamp duty, how does that actually work? I buy a house and land package, for example. How does that work?
Well, if you're buying a house and land package, you pay stamp duty on the land component only and not on the build component, because you're actually building the home for yourselves as an investment property or to live in, so the only stamp duty that's attracted is on the land component.
And that's totally different to land tax?
Oh, without a doubt. Yeah, the land tax is a tax that's designed to raise extra revenue because you are becoming wealthy and you're entitled to be paying more taxes. I don't like it. I have a lot of properties that I hold, and just to give you an idea how this can compound and hurt you, one of my properties alone, I pay $2,000 per week land tax.
Per week?
Per week. $100,000 a year.
Well, I'm tipping that that's not a 4-bedroom house in a suburb of Melbourne.
No, it's one of our office facilities throughout Australia, and it's at $2,000 a week. It's quite a burden that you have to find each year.
Is that $2,500 deductible, or is that a net?
No, it's an expense that we can claim as an operational expense, so therefore it saves us a little bit of tax on our operations.
Okay. So the land tax is a cost of doing business.
Yes. And
is deductible?
Certainly. For basically any expense that you have acquiring property or maintaining or holding that property becomes a deduction.
Thanks, Ron.
Thank you.
Well, there you have it. I've been talking to Ron Cross from ParkTrent, talking about capital gains, land tax, and that dreaded bogey, stamp duty. If you want to know anything more about this interview, go on to our guest profile section at Dollars with Cents. Click on Ron Cross, it'll all come up, and there'll be a few interesting frequently asked questions there for you.